Hello everyone, Jesse Webb, TradersPro. Market conditions, bullish in a bull market. We moved back up again yesterday. Markets look like they're going to gap higher a little bit this morning as well. Let's take a look at momentum. We've moved off of the range-bound momentum back up into the bullish trend. We were up at this extreme risk area, and we're just hovering back in this bullish zone now, which is a good thing here, and also seeing breadth pull back into that location as well. So we've seen some of that overall overbought condition of the market see a bit of a retrace, and then looks like we're going to get some continuation on that overall move today. Let's look at buy-sell ratio, seeing it still a little bit less than 1 right here, 0.7. So we definitely know that the overall breadth in the market is not participating in this last end of this rally right here. It's still a lot of these tech stocks, and so just not really broad-based, but still not too bad right here. Sentiment we're seeing pull back down for a little bit of a retrace. Remember, we can get some divergence on this indicator where we see S&P 500 climb to new highs, and maybe this indicator does not do that, create some divergence, something like that, where S&P gives us a high and then a retracement and then a new high, and this doesn't give us a new high. That's called divergence. We'll see if we get any on that here in this next market move. We're also saw a nice move in bonds the last couple of days, and that's always an interesting price play. We talk about that price pattern. It's pulled support right up at that $93 level and moving higher. It's that debate of inflation and interest rates. The bond market likes what's happening and is moving higher, which means rates are moving lower. So maybe in anticipation now that the Fed is going to do something at the next rate cut cycle or Fed meeting that they have, and again, it's moving higher. That's ultimately what equities are going to want to see, is continued bond prices moving higher. If we take a look at sectors here, we're seeing haven't seen much shift happening. It's been about the same through 3, 4, 5 of these overall sectors in uptrend buy signals, with the rest in hold, and then maybe 1 or 2 hovering around that downtrend. This real estate sector is still continuing to be in this downtrend. That does have a new up signal, though, a new short-term uptrend. So watch this real estate ETF. We may see some follow through on that as well, especially if interest rates start to come back down again as bonds are moving higher. If we look at commodities, take a look at gold here, and seeing gold find some support and just bouncing up. See if it's turned back up. Not quite yet. Nice support right here on gold, and see if it can clear up above that 195, 193 range, and could see some continued follow through on gold. And oil has been working through an attempted rally here and gave a lot of that back yesterday. And let's take a look at that at the 1-year time frame as well and see if that support area. So that next kind of broke down through that support area here. Let me just move this back over and kind of see where that's at. So interesting. Oil's just been an interesting price pattern. We'll see if this is our trending move and this is counter trend, and it's ultimately going to continue that move back down. Next stop or next support area is 87 for USO. We'll see if we get there today. If we take a look at some muscle stocks to consider, lots of biotech and drug stocks moving still, and it's definitely a place to be paying attention to. ARDX has been a real high flyer this year, a little bit of a pullback, retracement, possible breakout on that around that 950 range, which could see some continued momentum if that breakout happens. CMPR had a big gap. Not sure what the story is on that one. Consumer discretionary, and that's in that top of that list. EPIX, which is also another drug maker, medical drug. The top 2 of the 3 are getting new buy signals. Interesting sector to be considering. That'll do it for today's update, and everybody have a fantastic day today.